Good morning, everyone. So this is a special edition of this video stream that I do daily, helping people understand chart trading, avoid pitfalls, and maximize their returns. I just wanted to take like a special edition, special live stream that I'm just recording before the trading day to talk about what we talked about a little bit yesterday in the stream about what happened to GME and the risks that are facing investors today. So just to clear myself of legal, not a financial advisor. This is entertainment. What I'm saying comes from experience, but use your own. And don't listen to anybody but yourself when it comes to risking your life savings. So that being said, being a trader for about 3-4 years of staring at charts, you start to see patterns. And one of the common patterns that comes up is that when there is a giant surge of demand, interest, momentum, volume goes up, everyone's happy, and you go in one direction, presumably up in this case, if you're happy, there's usually always a retraction. So if you fly into the clouds and you go from $10 to $100 and you don't pay for it, you never go back down, you never go into the 80s, the 70s, the 60s, then what happens is the longer and longer you go, you're essentially defying gravity. If the stock is worth $10 fundamentally, and then people decide that we're going to pay 12, 13, $15 for it. We don't mind paying a premium. But then it skips to 20, 30, 40, 50 without stopping because, everyone's getting involved, getting caught up in it. That's fine. But if it never comes back down, the natural price for it is 10 bucks. Maybe 15 if you want to pay for convenience and, whatever. But you're now sitting at 80. You're now sitting at 100. You're going to crash, and you're going to crash really, really hard. So that happened to GME yesterday, and that happened to GME a week, 2 weeks ago. I don't know the exact time, but the last time. So we're going to go look at that right now. And why that matters for AMC investors is that AMC is tied to GME. So if you're invested in AMC and GME is going to go down, which we're going to talk about, then you're going to go with it. And I want to, get that out there because there's all these YouTubers and all these random people just pulling shit out of their ass about random Illuminatis, random ladder attacks. There's some cabal of evil wizards sitting in a tower plotting against you. It isn't. There's millions of humans sitting in front of a computer gambling, and they follow certain patterns, and they get scared, and it's greed and fear that drives the market. And yes, there is manipulation, but it's not to the point where it's, you know, the extremes that people are making up these stories. And if you look into these stories, just to go on a small tangent, you got people making up boogeymans and they go, oh, this was because of an ladder attack. Turns out they're wrong. Oh, well, that's because the stars aligned at the wrong time. Then they're wrong again. Well, it's because the planets conspired with the boogeyman and shit, there's robots and lizard people. They just keep moving the goalpost. Nobody can predict the market. So you get this sense of, well, if I make up anything, you can't prove me wrong because you can't prove I'm right. Because nobody can prove that you're right or wrong. But the proof is in the pudding, basically. So, yeah, if you can't predict the market, then what can you do? Well, you can analyze patterns, you can see trends. Previous history, what's happened in the past, does not predict what's going to happen in the future. Past performance doesn't equal future performance. That's standard. Everyone should know that. But if humans react to something like if I stab you and you say ow, and I stab someone else and he says ow, what's the third person going to do? He may not say ow, but the likelihood of him not saying ow is lower. So we can bet or hedge or gamble he'll say ow. But we need to be prepared if he doesn't say ow. What are the consequences? Well, in this scenario, maybe not much. But if I was banking my life that he's going to say ow, maybe I should have a backup plan. So maybe if I stab him and he doesn't say anything, I then shoot him And then then he'll say ow, right? But that's the stock market. You can't predict what's going to happen, but you can do your best to protect yourself against the eventualities, all of them, if you want. And the more risk you take, the more you gamble, the greater your rewards, but also greater your losses. And that's cool. That's fine. That's the game. But you need to be aware that, there's pitfalls and there's roadblocks and there's speed bumps and there's cataclysmic problems that can come down the road, such as losing all your money, going into a recession, God knows a whole bunch of things. AMC gets hit by a plague, GME goes under because the board of directors has, some crazy fight, or they get sold off or whatever. Like there's a whole bunch of things. So if you're just thinking it's only going to go up, it's always green, and it's just some Illuminati hedge funds that are eventually going to burn off and go away, that's not what's happening. There's fundamentals of a company. You're betting against them. It's hyperinflated. AMC not so much. You're playing in this bubble, and that's fine. But you got to realize that you're in a bubble. The bubble can pop, things can go wrong, and you cannot, and no one can, fight the market. The market will go where it wants to go, and you either go with it or you get fucked. End of story. Nobody can say, no, market, fuck you, I'm doing this. No, the market will run you right over, give you the middle fingers, and then throw some shit at you. You cannot fight the market. You might be able to temporarily push it up, you might be able to temporarily move it around, but it's temporary. It never lasts, and you will be crushed. Even if you're a billionaire, even if you're a hedge fund that thought you could push AMC down, push GMC down, what happened? Or GME, sorry, what happened to them? They got fucked because the market changed on them, because the public came out and said, you know what? Fuck this. I'm going to move the needle because I want to, because it's my money. And that's fine. That's how the market works. And boom, hedge funds go under, 50 billion goes out the door, people are losing their jobs, they're fucked. And we changed, we, they, I should say, because it wasn't really me, us, changed the face of trading. But can that last forever? Most likely not. Reality will set in, things will happen, so we have to prepare for that. So, anyways, that all said, that out of the way, because that's been really eating at me the last week. Just total bullshit from fucking really shitty people. And chat in YouTube videos. You're farming hits and likes. I get it. You're trying to be a celebrity, an entertainer, but this is people's money, and you're fucking them sideways with stupid advice. So, fuck, man. Like, nothing is absolute. You cannot say it will. It must. It has to. Yeah, well, has to maybe, but eventually the stock has to, you know, retract. But nothing is absolute. It could, if it wanted to, go to the moon, and go to the moon and Pluto and Uranus and keep going and never stop. The likelihood is low. It really should go down. It doesn't have to go down. It will not be guaranteed to go down. So you can't use absolutes. And yet they love them because it makes them sound like they know what they're doing. And it's total bullshit. If they knew what they were doing, they wouldn't waste time on YouTube because they'd be a multimillionaire in a couple of days. But of course, like everyone else, they make and lose their money. Most hedge funds make 40% a year, a little over 40%. They have all the intelligence in the world, a team of analysts, and they still can't pull out 100% returns. Yeah, they get a couple lucky breaks, but they lose money. It's not easy. The stock market is not a free money machine. It is, but you have to work for it. You got to know what you're doing. So, anyways, that all said, let's get to the chart here so I can give you a little heads up so that you can make your own decision but avoid a potential pitfall. And I just want to get that out there so I can feel better about things when it all goes to hell. Okay, so here we are looking at the chart. So this is AMC of yesterday, the 10th of March, 2021. So there was a big retraction. For us, the retraction was I trade AMC, sorry, 21%, right? We go to GME, ignore the drawings. GME had a major retraction. They went down 37%. They almost, if you look at just the share price, when they were flirting around, they went from 352 all the way down to 216. So basically 40% of the company evaporated in the span of 1, 2, 3 minutes. So you lost 40% of a currently $18 billion company, just went kapoo, gone. So you don't walk away from that. No company walks away from that. And historically, every company that's ever had a sudden drop, anytime any index has had a sudden drop, which is like the entire market, right? It usually does not do this. You usually get an impact. Let's go back to 2008. Here. You usually get an impact that when it's tragic, that basically causes this. You get a huge drop over a sudden time, and then there's kind of like a dead cat, or basically a recovery phase where people are like, no, fuck this. We got this. It's okay. So that's what this little green stick is. But then realization comes in, shit, no, we can't do it. And it crashes some more. Potentially there's a second bounce, often not, and then it rolls. And then after a good period of time, this is October to the next year, March, then it starts its recovery phase. So same thing here, big crash, we try, no, recovery phase. But the key note here is that this is July and this is March of the next year, right? It's not immediate. So GME, same thing here. If we go back to December and February, we have proof of what happens. A huge run up. They didn't pay for this run up. There was a little bit of retraction here and there, but they didn't pay. And then they paid. And so it overreacted because there's all this money and everyone's worried about their profits, and there's a lot of psychology about fear. And, they tried to pay for it, but nah. And then they paid for it. So what happened then? Well, from December all the way over to July, it basically just went meh, and then they had the recovery phase. Now, GME is pretty psychotic. People are dumping their money and they're just throwing it. So the recovery is quick, and you get big jumps, which is nice and cool. You went from $23 back up to $56, right? That's cool. But again, you go up so fast, there's a retraction, almost 50%. Or if you measure from the bottom, probably around 40. It tries, doesn't make it. It tries, it doesn't make it. So it crashes. And then you go back, to what goes on again, to what we happened here. So if we go and look at now, and we fix this chart, 1 month, sorry. So same thing. We go up too fast, we crash. We try again, this time we succeed, we crash. Then we go a little bit of recovery, we go flat, then an actual recovery, we pay a little, good. We go up, we pay a little, good. We go up, and we're paying. But this is just the start, right? Nothing is predictable, but you have payment. Payment is due. Rent's due. So this is what we're seeing here. We're seeing that bounce, that little cat bounce, or that little recovery like, no, it can't be happening. Now this is all one day right here. So this is the 10th. So if we look at this as a daily, which is what we should have been, right? You have a negative day. You have attempts to recover, but they end negative. You have an attempt to recover, but it ends negative. You have an attempt to recover,